Are you expecting the ratings to be better than ever, given, of course, the lack of other live sport to watch and the lack of ability to go to the games in person?
Good morning, Wilfred. Thanks for having me. No, I think, frankly, I think that the lockdown that we've gone through could actually provide a major incentive in terms of the audience. So while that sounds counterintuitive, I think there's definitely been a pent-up demand for sports consumption. So what the lockdown has done is to accelerate the cord cutting, which, as you know, sports as a whole has been the major glue that holds the pay TV ecosystem. And we think that's been a factor for the growth in streaming services that we've seen in the last several months. So when NBA returns, if they can manage all the health protocols, which continues to create some wariness, if they can pull it off, and then, of course, the NFL in September, that's going to be the big kahuna. I think we could really have a banner year for audience viewership as a whole for all of the sports leagues.
So I slightly misunderstood what you said there. So you do think it will prevent cord cutting?
I do think that the absence of live sports has actually accelerated the cord cutting in the pay TV ecosystem, and the return of sports will likely have the opposite effect. In other words, more and more people are likely to subscribe to pay TV when you have the NBA back and all of the other leagues. And you could see some attrition in the growth of deceleration in the growth of streaming services. So I think those are kind of the dynamics that we're watching right now. Clearly, streaming has been a major beneficiary of this absence of live sports. And we think that, when you have the sports leagues back, the pent-up demand and the appetite is going to have the opposite effect.
Let's talk about some of your stock picks. We just showed your recommendations. You've got a strong buy on CNBC parent Comcast, albeit the share price target is pretty much where it's already reached. What did you make of the earnings yesterday?
I think the earnings, frankly, were much better than we expected. We saw a lot of the tailwinds going on in the broadband business, which we knew was actually riding the tailwinds of the COVID-19 pandemic. On the other hand, the theme parks, as you might expect, the film studio, the advertising business has got whacked pretty hard. And so as we kind of look out, we think that, the next few quarters still provide some volatility, but the core cable business, led by high-speed broadband, it continues to, outperform expectations. The network has been holding up pretty, good. So we think Comcast right now remains one of our favorite names, and we did raise our target price to $50, by the way. So that's kind of our current outlook right now.